I didn't know. I'll be honest, I didn't know. So even when you look at the story and the journey of TERRA and where we've come from, I mean, it's been us stumbling on things along the route. It's not one thing that you stumbled on. So we've been doing this for over a decade, right? So in every season you evolve and you change. TERRA started as a technology company, right? Just making websites and software for guys. 3-4 years in, we went into payments. And then a couple of years back now, we're building infrastructure for digital wallets. So I think we never thought we'd be where we are. And I think COVID proved that for like a lot of people, is that you never thought COVID would come and you'd be wherever you are. So for us, I think it's been learning and unlearning a lot of things along the journey, a lot of evolution and changing. We've been adaptable through the seasons. So every season you stumble upon something you didn't know and you learn something new. And that sort of impacts how your business changes and how it evolves and, you know, the direction it takes. Yeah. So what we did is that we stumbled on something, right, after COVID. We lost a huge chunk of our business where I think we only 4 people after COVID left in the company. So we really needed to think about what's next, because we understood payments, we understood how people pay, you know, online and on digital platforms. So for us, it was really what's next. And when we were doing a bit of study and research and talking to people, and also in hindsight looking at what we had done for all those years, we realized we were building wallets for one use case or another. So a wallet here that is helping people get paid, a wallet here for transport, a wallet here for sanitation projects. So when we did a bit of reading, we realized, okay, wallets are driving financial inclusion in Africa, one way or another, because a lot of people are unbanked. You'd be shocked. And we were asking ourselves, these guys who are unbanked, where are they? So you find them in crazy platforms and some apps. You find guys don't go to commercial banks to borrow money. A lot of guys go to a Sacco or a TALA or, you know, some of these platforms to borrow. And all these platforms are wallets. So we started realizing an ecosystem where wallets are there providing different things for different industries and different people. And we started asking ourselves, okay, if wallets are really the future, and if wallets are driving this inclusion in Africa, who's building the infrastructure behind these wallets? And we realized there was actually no one doing it. We read a bit and then we figured out, okay, there could be something here. Wallets in their nature are pretty similar. If you look at how you use your wallets to pay for the expressway, and how you pay for parking, and how you use your wallet for, I don't know, your DSTV, Kenya Power tokens, those are small wallets here and there. They work the same way. A wallet is just like the physical wallet you have in your pocket. You put money into it and then you use it to spend. So we thought of, hey, all these guys who are building these wallets have to have internal teams, hire engineers, hire all these people to build this wallet and take it to market. Now, what that really does is that it locks out a lot of innovators. It means if you don't have money to have a huge team of people and people who understand payments and wallets to build this infrastructure, you're going to spend a lot of time and money coming up with it. So we said, what if we became the platform or that infrastructure so that these guys don't have to build it themselves? They can focus on their customer, the user experience and whatever they're selling without having to worry about, you know, what kind of wallet will I need to make? How do I need to make it? There's regulatory nuances around collecting and storing money that a lot of these businesses and guys, you know, are not aware of. So that's kind of how we ended up figuring out how to do like infrastructure for digital wallets. And our goal is simple. We build them so that you don't have to build them yourselves. So yeah, focus on your customer, your user experience, plug and play with us. Within a week, you've deployed your solution. Mostly B2B. So we empower digital ecosystems where these businesses are in, whether it's in, you look at it, whether it's in agriculture, we go and find cooperatives that are aggregating farmers who need a wallet for one reason or another. That wallet could be driving access to inputs. So you understand, like in agriculture, farmers are paid probably after every 30, 40-day cycles when they deliver something. Could be tea, could be milk. So when you speak to these cooperatives, you're giving them a wallet where you can be able to put in some bit of advance, think of advance payments. And then these farmers can use this to access services like fertilizer to continue farming, or inputs that they can use in their farms to continue farming. So most of our businesses it's a B2B model where we give them the technology and they're able to deploy that technology for their use case and their customers. Oh man, there's a lot. There's a lot you learn. One of the key take home for me is that people don't buy technology, they buy what it does, right? So is any single time you're building a platform, you always need to think about how is that making the life easier for the guy you're solving. The pain has to be big enough for them to be willing to pay you. Otherwise, you end up building fancy technology that no one's going to use. Yeah. Another key learnings we got over the last decade is that you need to build your technology with what we call with the capacity for the technology to be used across sectors. So we say, I'm trying to dumb it down. We call it sector agnostic. It means my tech needs to be able to fit into different industries and different sectors and provide value. Because before COVID, we were deep in payments, and a lot of our customers were those you call HoReCa, hotels, restaurants, and catering businesses, including a bit of airlines. So we used to process those transactions for them. What happened with COVID is that market niche died for almost 2 years. So there was literally no flights taking off, no one booking hotels, and that really made us lose like over 90% of our business. So right now where we are with this new platform, the infrastructure for wallets, we call it wallet as a service, is that we're building it so that it's sector agnostic. It can work in agri, support farmers. It can work with fintechs. It can work in other industries, healthcare. It can go into entertainment and give solutions, yeah. So those probably for me are the two key learnings. How the market is shaping is that regulation has played a big part. So we are more regulated than we were 10 years ago. 10 years ago, everyone used to just do fintech the way they want to do it. Right now you have the central bank coming in with policies around, what the limitations on what a fintech can do, especially in payments. We're having regulation coming in terms of data protection right now, saying if you're a data processor, this is how you should be collecting data, this is how you should be storing it, this is how you should be transmitting it. So they give you guidelines on how to do that. So it's created a lot of sanity. It means a lot of the, what we call fake businesses will not survive with the regulation around, quote unquote, in the word fake. It's because you've seen what even now CBK is trying to do with lending, is also creating regulation around digital credit providers. And that's just to stem all these runaway credit apps that are just being created every day. They swindle people. You hear people paying crazy interest rates, and that's because of the absence of regulation. So we've seen a lot of regulation come in, and for us, even the reason why we're happy to be part of some of these bodies like Fintech Association of Kenya is because you're able to have a voice when it comes to speaking to government around policies and regulations. Yeah. Yeah, I think there's a fine line. So while M-Pesa in itself is a wallet, us guys, when we say we are B2B, we give our technology to other businesses that don't have the technology that enables them to deploy these wallets. So I'll give a unique case study. When you look at some feeding programs that we're doing, right? M-Pesa is a collaborator, is a partner, because even when you look at what we managed to do with food for education with Dishi Na County, what we managed to do with Cup of Uji, for example, right now in school feeding, M-Pesa is not able to deploy a similar technology because of how M-Pesa has been built. It's just one wallet to pay everything. But you realize, in school feeding, you need to be able to give a child a smart wristband that can be you can load money into and they're able to tap and pay. That's what makes a difference. Wallets by themselves are not as powerful. it's all these other services that complement the wallet that make it really transformational. Because for us, when we give a wallet for school feeding, M-Pesa is one of the ways you can fund that wallet. So M-Pesa is really a partner. We're still working with Safaricom and M-Pesa on that. But there's these other things like having that smartwatch that kids really love. And they'll come to school and tap with it and access hot lunch. That is value. It's the ability for this parent to dial a short code service, like *128#, and they're able to manage that school feeding sort of wallet account and see how much money there is in there. So there's a lot of disintegrated services that complement a wallet. And traditionally in Kenya and in Africa, all those things are separate companies and entities and businesses. So our hard work is to really bring all those services together and make them support this wallet that we're allowing our customers to create and deploy. And then we feel like that's where the value is, and that's why customers come to us. Because traditionally, all of that is not with Safaricom, right? Safaricom will give you one piece, which is payment. There's this other piece of how do parents communicate with that system. There's another piece of, okay, who's doing messaging? There's another piece of, okay, how are kids able to tap and pay? Kids can't carry cash to school. So how do you enable children to pay from within the school, environment? So you have to have this smart wristband, or it could be a smart card, it could be whatever. So all of these disintegrated services, even including now we're doing credit scoring, because we are trying to figure out how do you know vulnerable parents who can even be able to pay that fee. How you're able to do things like uniquely verify identity of all the parents that you have in your school feeding program. We have ID verification capabilities that's across 20 countries. So we realize all of these services, when you bring in together, they create an infrastructure. And that's why we say we are an infrastructure. You're creating a platform that has all these services brought into one shop, and a lot of businesses can leverage. I think you build trust over time, and if you're consistent. And for us, we've been consistent over the last decade, where we offer solutions and we offer them very well. One of the other things is that 90% of our business comes from not even advertising and all these things, it's always referral. You serve one customer well, they send another customer and another customer. So we've grown this infrastructure as a service purely by word of mouth, and there's nothing that screams trust as word of mouth when someone recommends you to buy Omo, from a particular shop, because it's the real Omo, it's probably not a fake Omo. So that's one of the things. It's always been consistent in how you deliver your service. If you do it consistently over time, people get to learn about you and people trust you more. Secondly, in the nature of payments, there's a lot of distrust. And we experienced that like before COVID when we were doing a lot of payments. People don't trust you to collect money on their behalf, right? So how we engineer the platform is that you're able to come with your pay bill as a business, and we'll connect it to our platform in a way that it's your pay bill being used. Like in all the feeding programs we run, it's not TERRA's pay bill that parents send money to. The pay bills belong to our businesses, the customers that we've signed up. So in that regard, they don't have any worries around trust. Like TERRA is operating my M-Pesa pay bill that parents are using to top up. And we've seen that drive a lot of usage for us, where people trust you more if you go and you use whatever they're comfortable using. So if I come to your business and you love M-Pesa, we can use M-Pesa, and we'll embed our wallets with your M-Pesa. If you love using another provider, it could be Airtel Money, it's fine. We will connect Airtel Money with our platform. So that we focus on just giving you the infrastructure. It's not us collecting money on your behalf. Yeah. Yeah, in 2016, we tried doing an escrow service. Back then, TERRA was still a technology company, yeah? And part of it was going into town and convincing people that, hey, we will be your escrow service, just forget your M-Pesa, we'll collect for you and we'll make sure, all those niceties. And realize adoption was really low. Like no one trusts. Yes, what's an escrow in the first place? And this new thing, how do I trust you'll not run away with my money? So, and we realized money is trust. So if you don't have the visibility and brand of like a big bank, or you have partners that really endorse you, people don't necessarily trust you to collect their money and manage their money. So it's always a chicken and egg. When you're starting up, you're probably not big enough, so people don't trust you. But as you grow and people start seeing your reputation in the market, people start trusting you because of the kind of partners that you're onboarding, it becomes a bit easier. But for us to mitigate that is that we always say you don't have to use our own pay bill. Like you can use whatever you like collecting with. If you like M-Pesa, we'll use it. If you like PesaLink, we'll use it. And that way you feel comfortable having full control over your money, even if you're using our infrastructure. Yeah. So our customers, we've segmented them into sort of like pillars. We have clients in agriculture, in education, which is proving to be big. We have some few customers and use cases in healthcare, and now we're exploring entertainment as also a vertical. For us, we've always wanted to go into the blue ocean. And this is what a blue ocean means. It means you go where people are not going. So if everyone is focused on collecting from a mama mboga or a front store around Nairobi and Westlands, wherever, Aska is going to traditional industries where innovation has not been happening as much, and figure out how can our wallets add value or solve problems in those spaces. So in education, it's pretty straightforward. Food for Education is one of our customers. We have Kapovuji as one of our customers. In agri, we have KTDA, who we're working with all the tea farmers in the country. In healthcare, we're working with a company called Mednow, who's trying to really change how people access healthcare. Think of it like a lipa pole pole for medicine or services in hospital when you don't have money. In the entertainment, we're speaking to a couple of people, and we hope to really deploy some solutions this year there, which is in around festivals. How do you make festivals cashless? Yeah. You've been seeing that thing going around where people now are faking M-Pesa messages.
Yeah, that's how.
So so there's a big problem around that sector where you have an event going on. It could be an event with the UN or whatever. It could be a big festival, and you have a big guy in town. 10,000 people show up. They're paying by M-Pesa, our Green Monster, right? And people are now faking messages, and at the end of the event, they do reconciliation, they lose millions. So we're trying to figure out how a tap-to-pay solution in the wallets can be able to make the entire festival 100% cashless. And that could solve a lot of their pain. So we're really excited about that because it's an opportunity for us to go in. We have the technology and be able to really give a lot of value in that industry. Yeah. Security comes from you allowing people to come in. Let me explain. So when you're building a platform like an infrastructure, you need to subject yourself to a lot of audit. It means you need to do a lot of penetration testing. They call it vulnerability assessment tests. It means there's third party, think of it like auditors for accounts, but now there's auditors that come and audit systems. So these guys come, and what they're doing is just trying to hack you. That's what they do. So number one, they just try and hack you. So they do it internally and audit your systems internally. For example, how often are we changing passwords? Are people living with computers that are carrying sensitive information from the office? And then they go outside and figure out, okay, how secure is this infrastructure? Where is it hosted? Who has access to it? What are these layers that your teams and engineering people are able to access in the platform? So there's security from that, aspect. And when you're dealing with regulation and central bank, we're applying to get a payment service provider license, is that it takes 4 long stages. And you really have to demonstrate to the central bank that we've done our homework. These are the results of the test. This is where we have loopholes, and this is how we are planning to seal them. So that by the time you're getting the license out, you can confidently say you're secure. But I always say, there's no system that's 100% safe, unfortunately. You see Google being hacked every day. You always see these stories, data. So what we've realized is that it's an ongoing process. It doesn't start and stop. You have to continuously do it. Whether you have a policy on doing it every quarter or every month or every whatever, and just put in enough measures and gates so that you're able to detect it early. Security is just like having CCTV, for example, in your home. CCTV will not prevent theft and fraud, but the goal is for it to show you where did that guy jump the fence, like Alingililia what gate. So that's the whole point. And if you put enough of those systems for your business, you'll not only be able to detect, but also deter in future. So I'll be doing a lot of that to do a lot of security on that, but also planning to do a lot of capacity building for staff to enable them to know what are safe practices, what are not safe practices. You know, like don't go to any cyber cafe and just log in onto your Wi-Fi or to Java and you're there working on Java and you're doing company business. You expose yourself to a lot of vulnerability. So it's in terms of people and infrastructure, and that's how we secure it here. I think, bear with me, I'll jump around. So I've seen a lot of trends happening where there's a lot of AI talk going on and everybody's like, yeah, AI. Yeah, it's a shiny new toy. So, but for us, we still feel like AI is something we're starting to understand. So I don't think we've really understood it to that level where you're starting to give solutions that have AI. That's my honest take. Is that it's still a new technology. We're starting to understand it and figuring out how does it apply in terms of fintech and how do we offer this service with AI. So there's a lot of AI talk. There's a lot of fintechs moving towards what I'd say like ability for, giving abilities to companies and corporates to pay out. So there's a lot of movement and shift towards spend management in one way or another. Yeah, then there's a bit of blockchain and those things for crypto, but I don't know, it's a wave. I don't know whether it's dying and coming. It comes in waves. So there's a bit of that, and I always feel like Bitcoin is good and all these exchanges are good because of the underlying technology. I'm not a big guy with Bitcoin and crypto personally, but the underlying technology has principles that can be used with fintechs. Which is around like security in terms of payments, those ledgers things with Bitcoin. So those are the three things I'm seeing around the industry. We've not a lot in the verticals we're in. I think us guys, we always say we partner with aggregators, or we call them anchors at some, at times. It's a technical term. So collaborators is easy. So collaborators is that we always look at industries where wallets would be transformative. For example, we go to education and we see, okay, who's digitizing how kids are actually paying and spending in schools? And we look at, okay, who's the right partner to have in that industry? So we go and find someone like Zeraki. I don't know if you know them. Zeraki have almost 6,000 schools across the continent. And we embed our infrastructure with them so that we're able to drive things like pocket money, access into 6,000 schools in the continent. So that has always been our approach. And we think it's an easier way for us to really achieve scale and impact. We're a socially, what do you call it? You say, what do you call it? Socially conscious company. So we are commercial, but socially conscious commercial. I think there's a word like that. So is that we're really excited seeing projects that we're able to solve problems for, and they have huge impact. So I think when you look at it in that regard, we're not in the middle where you get, you find some of your customer could be your competitor. We're not really in that space. We go and find someone who's aggregating people who would need wallets, and we embed at that level, at that top level. So it's what we've done with KTDA, for example. You partner with KTDA, you get access to almost 1 million farmers, right? Now it's easy for us to figure out, okay, what else can we do for this farmer? We've automated collection of tea. Can we layer financial services to this guy? Who knows? Can we move fertilizer subsidy through this wallet, right? So that's kind of how our approach has been, because it allows us to be able to remain lean and offer services and solutions, that has a huge impact at scale. Yeah. Yeah, I mean, it's been niche and taking all your learnings over the last decade plus and figure out what's the best way to take this technology and for it to be used across Africa. It's much more difficult for Terra to go and speak to every school, right? You'll need a huge team, a lot of money, it takes a long time. But it's easier if I go and find a partner who I give value to, and this partner will give me access to 6,000 schools. So that has always been like our go-to market, is finding who are these aggregators, who aggregate these communities of either farmers, parents, teachers. If you look at school feeding, we don't cook, right? We're not the ones who are cooking in these schools or feeding in these schools, but we understood very well collections will be a problem. They need to automate collections of these small contributions kids make during lunchtime. So if we're able to solve that problem and embed with this aggregator, it's easy for us to be in 100 schools or 250 schools by the end of a year. So I think having clarity on our go-to market and looking at how the technology can be used at scale has really helped us carve that niche and figure out very well we want to be in this space, we want to be in this space and this space, because one, they're underserved, and two, we think we can add value, and we are seeing collaborators who are happy to use our technology and add values to this customers. You always ask yourself, are you a technology company that's enabling finance, or are you a financial services company? Right? That's technologically.
Everyone is having that existential crisis.
Who are you here? So you need to look at who you are really. So are you a technology company first, or are you a finance? Yeah, and I think that's where even banks are struggling to figure out, because banks want to go into tech.
Yes.
But they just don't know how. Yeah. So just launching things left, right, and center and shutting them down. So I think what's going to happen is a lot of what you call fintechs will really need to be strong with finance as well. Because we've seen a lot of fintechs coming into the market where they don't have proper governance around finance. And you see what's happening with Binance in the UK. All these guys came into crypto, you're dealing with money, but you're not doing it absolutely. You're not doing it in the right way, and you start ending up in problems. You start losing people's money, you start doing wrong trades with people's money. So I think as more fintechs will have to also start thinking finance. What are the best standards? You start thinking a little bit like a bank. I don't like using banks, but you need to really put in standards and governance around finance, as opposed to before, where you're a technology company, you're like move fast, break things, and offer services. So we really need to be financially conscious, because when you're a fintech and you're moving value and money, you need to think about, are you doing it in the right way? Is it in the realm of how you're licensed and governed by the central bank? So we need to take, we need to be a bit more serious, in that regard. But also not forgetting that we need to also offer our solutions and services using technology in very easy way and forms. I always like going back to school feeding, because we realized when it took us like a whole year to figure out that car watch thing that you see kids with, because we tried different form factors. What works, what doesn't work, what does a kid value more, and we tried many things, and that thing stuck because it looks like a watch, period. So, and what we realized is that kids, we were actually impacting a bit of financial education, because kids are starting to see money existing in different formats. You know what I mean? They knew money is 20 bob that mom gives me at home, but now they're like, there's pesa here. So some kids used to chew those things initially. Wanakula, they open to see there's 50 bob that mom aliweka jana. So they used to chew that watch, and it was really interesting. But now they came to learn, so money can be digital. And I think that's what we need to spend more time doing as fintechs and tech companies, is figuring out, how do you take this complex thing that people call payments in a way that a 80-year-old can use it every day and start understanding about money and how money can look like. Rather than just saying we have the best technology that uses AI, uses all these things. So it's breaking it down and offering it simply, and in a very simple way that a farmer can use it, but at the same time following the principles of finance as well. Yeah. We're in a season where it's more of finance than technology will come, because technology is interesting, because you're not the only one who can do what you're doing in tech, right? You can wake up tomorrow and build a Pula or build a TERRA. If you have enough money, you can do it, right? But we really need to think about, right now we're in a season where we're doing the licensing, like I told you, CBK. So we're putting a lot of governance and structure around finance and how this money moves and policy and how we comply with data protection, a lot of those things. But then that comes to a place where now it's sort of streamlined. Then again, you have to wear the hat of the technology. How do you offer your technology better, cheaper, simple? What new technologies are coming up? For example, people speak about AI. And for us, we're saying, okay, let's look at AI. I think AI is our next tier plan. It's not even this year, right? It's saying, okay, we're doing these things with school feeding programs. How can this thing, people are calling AI, help us figure out how many plates of food do they prepare tomorrow based on historical numbers? Do people eat more in January? People eat more when it's raining. So there's a lot of information and data we are collecting, but we need to make it meaningful. And we're saying, okay, let's prepare the data first, because you cannot have AI without data. So yeah, just to answer your question, we're now, I feel we're in the financial side, where we want to put in governance and structure, and then once that's ready, we'll continue evolving the technology. And I feel like that's a trick question. Yeah, you will come and play this video in 10 years, like, Muriuki, you said this. And then, so one is that I see less transaction fees happening for me. There'll be less and less I don't think, I'm not sure when it's going to get to zero. Like I say, it's going to get to zero. But people increasingly will stop paying for transactions. For me to pay you to send money to you, it's very expensive if you think about it. So I feel like peer-to-peer payments, for me to send you money, for you to send money, that will continue being cheaper and cheaper, cheaper, all the way to almost zero. But secondly, I think payments will be democratized, probably with this whole blockchain thing that's happening, where we don't have to move money through a central regulator. Right? That's what I think. We might get to a point where, like bitcoins don't pass through like our central bank, right? I will send money to someone in UK with bitcoins and that's it. So I see a lot of that coming in because of the way we perceive regulation in our different markets, because we feel like only Big Brother, right? Big Brother kind of fungias you and how you transact. You remember that thing for now, $1 million, Bob. If you do anything more than $1 million, you have to show up in a bank, give reasons and proof. And it's around, they'll say it's money laundering, we want to protect. There's all these reasons why. But I'm starting to see a lot of platforms and exchange platforms coming up that will make it easier for you to send money without having to be answerable to like anyone. So it's decentralizing payments and banking and finance. So I see that as a future trend that will come up. They had that thing for a long time. The Hawala, they call it Hawala system, yes. It's an interesting thing. It's been there for ages. There's been this noise of banking 2.0. I don't know if you remember, for quite some time, like what does a new era of banking look like? And we always say banks need to focus on what they're good at, which is just banking. You store value, do overnight lending, do those things. Those are things banks do. But let innovators and tech companies drive the user experiences. Like partner with them, you know. But now what you're seeing is that banks want to be everything. Everything, want to be everything. Where you find Mkulima, your bank is there. You find they want to be everywhere. And there's a danger in trying to be everything. Like you need to really focus on what you're good at. So if banks are good at collections and disbursements, let them do that, but collaborate with a lot of fintechs and companies and empower them to do, you know, what we do best. And a lot of banks are starting to look at it like that. Like DTB is one of them. DTB. Yeah, so they're opening up the ecosystem to tech companies. Yeah. My biggest achievement at TERRA to date, not dying during COVID. Like that's my biggest. No, it was tough. You can imagine going from a team of people to a team of 4. You're in 3 markets coming back to 1, right? And then Uganda and Rwanda. So we had just gone into those markets. I think we had people pushing business and a bit of it. Uganda was a lot of our testing. Anything before we take it outside Kenya, we used to take it to Uganda and we test it there. So imagine you finally, what happens as a founder is that you grow your business, you start seeing that light at the end, where you start saying, okay, I feel like the business is now stable, it's gonna grow. Then this thing called COVID comes and you think it's gonna stay for 3 months and go, then it doesn't go. 2 years later, you're still in that. So you lose people because you can't pay salaries anymore, understandably. We're one of the companies that we didn't cut any salaries. People are doing 50%. We held on for almost a year. So we were bleeding, you bleed, because it's like, okay, 3 months, 6 months, this thing is not going. But now, employees can sense the way things are going, so people start dropping off, right? And then you just left 4 people. Now you feel like you've gone back in 2012 when you were starting. You're back in the trenches again. So you're doing everything. That was the worst time of my life, man. So, and you still have to motivate yourself. You've just married someone. You've brought them into your house and you're telling them, I'll take care of you, right? You have kids on the way. So there's a lot of pressure that comes in and you still have to ignore that pressure that you're feeling and going through and be positive. That you're going to start again and you're going to make it and you're going to build a resilient business. That's one, I'm most proud of that. Yeah. It's, man, I don't know where that strength comes from. In hindsight, you look at it, you're like, why am I doing this again? But you don't know where the strength comes from. And I'm really lucky I had a partner like my co-founder, Martin, who in equal measure had the same strength. I don't know where it came from. Because those are things that really make you guys go apart. You're like, we're not with this again, you go separate ways. But during COVID, we were just sitting, I went back into programming myself, because there was no programmers now, you don't have a team of engineers. Trying to figure out, okay, what's the next thing? How will this work? So navigating life and the struggles that were there, in houses and homesteads, and still having the grit and resilience to think that we can turn this thing around. Man, I don't know how we did it. I don't know. Yet we're here now. So that gives me PTSD, a lot of PTSD, But but in hindsight, you say, if we survived COVID, nothing will kill us now. If we survived that thing, nothing. So fear goes. I always tell people it's like when you have your first, let's say you're learning how to drive and you have your first incident. You knock someone, you knock a wall, you knock something. It doesn't have to be severe, but there's something that happens, like fear goes. Yes. And I feel like that's what happened to us. Yeah. We lost everything, fear went. Yeah. You're like, there's nothing more to lose. So right now I feel like there's no fear. Like we're taking risks and you're like, we survived COVID. This is nothing compared to that. So failure for us is not something new. Yeah. Very differently. Very, very, very. Previously, for us, we thought, you think you have a Midas touch, like everything you're touching works. We were that one company, I always laugh and say, we never took even marketing and storytelling, whatever you're doing seriously, because we never had to do it. Things were working out. And for me, success is not how high you've flown or where you are, because I feel like we were somewhere and we felt we were successful. That's not success. Success is really how you fall and how you come back, for me. Because you see a lot of people, closing shop and they're like, I'm never trying that thing again. But once you fall and the humility that comes with it, you're no longer that CEO of that company that you felt was big. And it's humbling because you have to tell people you failed. You have no idea how hard it is to tell people I failed. And people are looking up to you because you knew it all. So failure in itself humbles you, and managing to go through failure and coming back again and starting to see you on the line of becoming successful again. For me, I think that is what success is. Yeah. I feel you have to fail to be successful right now. You have to fail. Final question. Yeah. I have no fear. That's a dicey question because whilst right now I feel like I'm the best person, there's always people that you bring on board your team who are better than you. And I feel our job as founders is to manage that talent. My job is to make sure I bring in the best people who are even smarter than me. So best, I think I will be best because of experience that I've had, but not in terms of like I'm the best engineer or I'm the best thinker in this company. But also we need to build these companies with succession in mind. Understanding that I'll be able to grow Terra from point A to point B, and we need to bring in someone who's better to really like grow it further. And COVID taught me that. Taught me that you and your company and your life are two different things, right? And it made me understand that my purpose is to take Terra to a particular point, and understanding and be humble enough to know that you might have to bring in someone who's way better than you, more experienced, and they're there than you to take Terra to now different heights. It doesn't mean I've failed as CEO. I've done my job. And my job is to make sure like I bring those people and put them in the right places where they can be able now to unlock, a new level of growth for their company. Yeah. A lot of it, yes. We got a unique opportunity to build the business again with experience now. So you find you bounce back faster. So whatever used to take you 3 years, you can now collapse it and do it in 8 months. Because you know this not to do this to do. You know when to ask. So I ask a lot of questions. You build networks, so you know who to call when you're stuck here. You know where to get the right advice. So yes, we're seeing a lot of that. So we're moving faster than we started initially in 2012. Yeah. I think it's a people. It for sure has nothing to do with failing, and like it's a people. It's seeing how people come and they evolve. You know, when you're sitting as a CEO, a lot of your job is managing people and resources and time very well, right? So whilst you're managing people and resources and time, you get to see the people that are managing this time, your engineering, your resources in the company. So it's always seeing how people come in and how they leave. So there's people who come knowing nothing, and by the time they're finishing 1-2 years, you see the kind of people that came out of Terra. You're like, okay, it's because of Terra that you're now who you are. And for me, I think that's one of the things that really stands out for me. I'm happy as colleagues. I'm not sure about Marty, but for me, I'm really happy when I see people come in and they leave better than I actually found them. And you go outside and then you realize this guy who you were with in 2013 is now leading technology in a big firm. Or the highlight is when Google poaches your person, like someone who was handling engineering. You're like, yeah, I trained you well. And like a company will come and pick people up, because people and staff is one of the things you'll turn over the most. As people come and, and they go, you'll get to see new people coming from different backgrounds. You get to see different thinking. You get to see geniuses, quiet geniuses, and you get to get people with good vibes. And you kind of get to interact with a lot of people. So I'm a social being. So I think that for me really, makes me happy, yeah.
Follow us on social media for more insights and more info. Fintech Association of Kenya is the voice of fintech in Kenya.